What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. But the charting method and the trading method that we use can be implemented with any company that's publicly traded in the U.S. stock market. So make sure you hit that like button if you enjoyed this video. We appreciate those who continue to tune in and give us a thumbs up. It really helps the channel grow. If you haven't already, make sure you hit that subscribe and notification button. That way you are alerted to when we release new videos. We do release bonus content from time to time, and we're actually starting to implement a suggestion that one of our subscribers had a little while back, and that will be posted after tonight's video. It's just a little bit deeper dive into our process of setting up the chart for the video, and we thought that was a reasonable request. So instead of just prepping and then starting the video, we went ahead and recorded the prep for the video. So that will be posted, and we're going to try and start doing that a little bit more often as well. Today was not the best day to do it. There wasn't a lot to change on the chart. Broadening formations weren't being created. Lower lows, higher highs, things of that nature weren't being done. So not a lot of volatility to really have to mark on the chart. So not the most eventful one today, but they should get a little bit smoother. We'll try to really keep those two days when there's active, really having to update the chart. But anyways, I digress. That's going to be in the bonus content. But now the video, tonight's video, this video right here, one of the nightly videos, we identify triggers and targets for trades ranging from scalps and intraday trades all the way up to long-term swings and leaps as well. So stay with us for that on this video, and check out that bonus content after if you'd like. So I do encourage you to watch this full video. We do go over triggers and targets, yes we do, but we do go over price action on all time frames. So we've got some pretty good insight that we like to give out, and I think you would enjoy it if you stay with us the whole time if you're new to the channel. So let's go ahead and take a look at the agenda. I've wasted enough time in this video already. For the agenda today, we will recap the price action from Tuesday, January 6th. We'll zoom out like we always do to look at the week, month, quarter, and year. And then we will zoom back in to set the 4-hour markers, along with the triggers and targets for Tuesday, January 7th, as well as a review of the triggers and targets for the week, month, quarter, and year. So jumping into the chart, we're looking at the 5-minute like we always do. We start here. This allows us to take advantage of the proven and repeatable strategy that we use every day. That strategy is quite simple. It is look for higher lows at or above opening print to get into calls, or look for lower highs at or below opening print to get into puts. Opening print being the first traded price of the day. So as long as you start the day out with your previous high a day, overnight high, previous low a day, and overnight low, then you have your targets. And then once you get your opening print, then you have your triggers, right? So if you're getting calls, you're usually looking for previous high a day and overnight high as your targets. Whichever one comes first is the first target, whichever one comes second is the second, and then same to the downside. You're looking at normally overnight low and previous low a day as your targets to the downside, right? So we can see today it was basically one move in the morning, and that was kind of it, right? You could have also taken advantage of the higher low, but then you'd have to just sit through a grinder of a session, right? So if you're already swinging, not that big of a deal. That's basically what we were doing. We did unload a couple of contracts for January 16th, took some profit on those when we got this lower high here, but other than that, there wasn't really much to do on the the scalping early in the morning time frame. When this wasn't a higher low on the 5-minute, maybe it was on the 1-minute. It probably was on the 1-minute. So if you're looking at the 1-minute chart, you could have taken this higher low for the push up. We saw a little bit of a stall out around market makers expected move high for a couple of minutes, but then we ended up just pushing through. We made it up to this 123.6 bull flag extension of the holiday bull flag. I'll show you what I'm talking about real quick. Let's go to the 4-hour. So if we look at this was the 17th down here. This was the 17th, December 17th. So the week before Christmas, I think it was Thursday. And from there, we just shot up and then went sideways, right? So this looks like a bull flag here. All right, let's activate this so everybody can see it even better. Right, so here's the flag pole, here's the flag, and there's our extensions, right? And so far, we've been kind of blowing through them. We saw a little bit of resistance here at the 100 fib extension. That was yesterday where we had that little bit of a pullback. But I say a little bit of a pullback because we didn't even get a higher low on the 4 hour. But anyways, let's go back to this 5 minute real quick just to finish up the thought about the early scalping or early entries into a trending day. Let's just get today on here, right? So if you did not take the higher low on the 1 minute, you could have taken the, let's go to the 15 minute, and this is the higher low that we get on the 15 minute today, right? This one right here. So you could have, as soon as price went above the high of this candle, when this candle went above the high of this candle, that's your entry. And then we made a lower high in comparison to this high, but we considered making higher lows. So at that point, it's just consolidation. We talk about that almost every day. When you're getting lower highs and higher lows, it's just consolidation. It was along this 123.6. So the next target would be that 54.46, and you can see we went up and almost hit it, but got the rejection there. Pushed down a little bit at the end of the day. Let's see, after hours down 10 cents in after hours, so not down a whole lot. Maybe we get this push down in the morning, but not a whole lot to do from the repeatable strategy other than the higher low here on the 15 minute. Looking at the 1 hour, right, we didn't even, right, we put it, so there we go, we didn't even get a 2 down on the 1 hour today, right? But what we did is with this 2 up going higher than the previous high, we locked this 2 down here in as a higher low, right? So higher high, higher low, higher high. We're obviously in an uptrend on the 1 hour time frame. No real pullbacks except for yesterday or Monday, depending on when you're watching this video. So right, we got the gap up, and then a little bit of a pullback, but then we pushed up again. So let's see where things take us. But yeah, unless you were already in contracts today, not a whole lot of entries except for on that 15. Otherwise, you were just kind of chasing, to be frank, right? On the 4 hour, we talked about, let's see, when was this? This was last week. Yeah, we haven't had a 2 down or a higher low on the 4 hour in 3 days. So we did talk about how, oops, let's get a better chart out here for us. We did talk about how yesterday finishing with an inside candle on the 4 hour chart could present a 1 2 up 2 down possibility, or 1 2 down 2 up, depending on which way we went with the first 4 hour in Tuesday's session. But we did get that 2 up, but the second 4 hour candle of Tuesday kind of stalled out. So if we do can see that added pressure in the after hours, we've got economic data in the morning that's going to be released as well. If we see some downside catalysts, watch out. We'll talk about the 4 hour triggers and targets here in a second, but if we reach the magnitude of that, we're technically triggering a 1 combo 2 up 2 down, and that's going to take us down to this gap at least. So or it should, right, if it were to play out. But there we've got some support below it, but just keep that in mind tomorrow, right? We've had all these gap ups and big push today. We need a little bit of a pullback, right? I'm not saying that's what we're going to get, because SOXL, high beta stock, it tends to go on some nice runs when it runs. So it would not surprise me if we continue to push up for another day or two, especially if that economic data and whatnot is a catalyst to the upside. So again, not saying we're going to pull back, but we are steadily approaching this gap up here around 60 as well. So we've got the gap above, pretty large gap. We've got a couple of gaps below that we've left from the past couple of days. So I would, guess that we're probably going to get some push and pull, tug and pull, whatever you want to call it, back and forth between bears and bulls at this level. We're at this 150 fib extension from the April 7 bull flag. Right, here's the 150 fib extension. We're above market makers expected move high for the week. We're above this however month range that we've been in, right? So we could just see sideways action, right? We'll have to just wait for tomorrow, wait for the economic data to be released, and then wait for trading to actually start to get a better gauge of that. But as long as we're ready for both directions, we've got our triggers and targets ready. Let's zoom out a little bit more. It's kind of the same thing over and over, so I won't go too deep into this, right? Obviously, we went 2 up on the week, right? Locking this in as a solid higher low, giving us a soft higher low here, and we've got the higher high. So at the very least, we are expending a broadening formation, but it looks to be that we're just continuing this uptrend that we started. So not a whole lot to worry about from the week perspective. Same with the month. We talked about it yesterday, how we went 2 up, locking in November as a higher low, and then also going higher than October's high, which gives us a higher high, and after a higher low, a higher high starts an uptrend. So on the month, it was important that we got this solid higher low, because I was a bit worried about this soft higher low here. We've got this gap right below it and then some more gaps below that. So if we were to pull back more, I thought there was a pretty good chance that we could have a deeper pullback to close this gap at the very least. But for right now, looks like we're going to attack that gap at 60 before we do anything down here. So it was just important that after coming from a lower low, right, we had lower high, lower low, lower high, lower low on the way down. It was very important that we got that solid higher low in on the month chart, right? That helps solidify the quarter, where we're in this combo 2 down, combo 2 up, right? Here's the one from the fourth quarter of 2024. We had the combo 2 down at the beginning of 25, and then the combo 2 up at the end of 2025, and we're just extending that, right? So as long as we're above this 36.15 level right here, which was the trigger of this one combo 2 down, combo 2 up, we're in good shape. We're looking to go up to this 70.08 level because, right, the one combo 2 down, combo 2 up, the magnitude of that move is not the high of the one, but the high of the candle to the left of the one. So that's where we've got the 70.08. And that also plays into that yearly chart where we had this nice green hammer candle from last year, right? Initially triggering a 1, 2 up, 2 down, but making a higher low, and going 2 up this year, triggering this 2 down, 2 up, which also has a magnitude up here of 70.08, right? So that's what we've got from a zoomed out and zoomed in view. Nothing's breaking down right now. Everything is fine. I'm guessing it's going to be a pretty short video because there's just not a whole lot to talk about, right? It's the same thing over and over until we get some type of pullback. If we get a pullback, then we start looking to see, are we going to get a lower high? That might start a larger pullback, but until that happens, we've just got to go with what we've got, right? So let's look at the chart in preparation for Wednesday, January 7th. Up on the chart, I have our 4-hour markers. I've got previous low a day down here at the bottom of the chart, overnight low here, previous high a day at 54.30, and overnight high at the top of the chart. Now, this overnight high and overnight low, those are just guesstimations for example purposes. Obviously, the overnight range is a lot tighter than that so far, and we don't know what will happen by the time we wake up tomorrow morning and price actually starts trading during actual trading hours. So this is just for illustration purposes. They're not the actual levels, but the previous high a day and previous low a day are. And then let's just say that we open up in the middle of that overnight range, of the suggested overnight range, maybe right on that 4-hour trigger to the downside, right? If we open here and we push up, maybe reject off a previous high a day and pull back, but then we get some type of higher low at or above this opening print level. So we push up, we come back and we pull back, then we get some type of higher low and we push back up. We want to enter calls. First target being previous high a day, second target being overnight high. Right. At the same time, if we go to the downside, if we open here and we push down, maybe we bounce off an overnight low and we push back up or reject off of this opening print or even this fib extension that we talked about earlier off the holiday bull flag. Right. Then we push down. If we get that lower high at or below opening print, we want to get into puts targeting overnight low first and then previous low a day. Right. So more magnitude to the downside with this example, but always take into account risk to reward, right? And either, don't go too heavy if there's not a whole lot of range to trade for, or make sure you're at the money, in the money, and taking those profits when you need to take them. Now, we can always go past this previous high a day and overnight high, or previous low a day and overnight low, and we will need to look at our 4-hour triggers and targets to see what those are. But just to make sure that it's nailed home for anybody that's new to the channel, we get the opening print, and we look for higher lows at or above opening print to get into calls, and we look for lower highs at or below opening print to get into puts. All right. So now let's go to this 4-hour chart to look at more of a day trade, or possibly even overnight swing, right? So here we have the fib extensions of what I'm calling the holiday bull flag. This was December 17th. We pushed up, made the flag pull, went sideways for some days, making the flag, and now we popped out of that range. So that's what I've got as the holiday bull flag. We're up here at this 138.2. We are 2 up, but we still have the 1 from the second 4-hour of Monday looming out there for us, right? So if we go two down in that first 4-hour of Wednesday's trading, that does trigger a 2 up, 2 down. The magnitude of that move being the low of the candle to the left of the initial 2 up. So that would bring us down to previous low a day. But if we actually break below previous low a day, that then triggers this 1 combo 2 up, 2 down. So just like on the quarter chart, we have this 1 combo 2 down, 2 up that we're in, that should take us to 70.08. Here's a 1 combo 2 up, combo 2 down. So if that triggers, that takes us to the low of the candle to the left of the 1, which is this 2 right here, which is the top of a gap. So we've talked about intraday tops and bottoms of gaps can be bounce points. So could we bounce off of the gap at that point? Quite possibly, but that gap, we're at the gap at that point, and there is the threat that it can be filled as well. Now, if we dip into that gap, get into a little bit more of a combo strat as well. We've got this 1 combo 2 up, right? So this candle, this candle, this candle, and this candle have all combined essentially to make one big 2, right? 2 up off of this 1. And so if we reach this gap and we dip into the gap, we're technically triggering a 1 combo 2 up, 2 down, and that would take us down to the top of the next gap, right? So you can see how things can really snowball here. We've got a lot of economic data to be released tomorrow and Thursday, and I believe Friday as well, right? A lot of jobs data on Thursday. So you can see how there can be some catalysts to the downside, and how that type of move, it shouldn't be surprising if it does happen. Do we want it to happen? No, but it shouldn't be surprising. Now, if we do pull off this 1 combo 2 up, 2 down, and it runs to strat, now we're really threatening some things, because now we're looking at the week, month, quarter, and year flip. I'm sorry, not week, but month, quarter, and year flip, right? This is where 2026 opened, right? So if we go below this level, not only will we have flipped the week red, which goes right up here at 50.35, but then we will have the week, month, quarter, and year that are all red. Full time frame continuity to the downside. Advantage bears at that point, and we've still got another gap here that can be filled as well. All right, so that's how it could snowball to the downside. We are in the face of a pretty strong uptrend. News of chip shortages, things of that nature. Wouldn't tend to think that we would fill all of that, especially in the next couple of days, but it's a very good possibility. And just being fully transparent, I have a couple of contracts lined up to the downside. If we do trigger, right? I've actually got a sell a call if we break down enough below the last quarter's high, but definitely have some puts lined up to jump into if things start triggering to the downside. So just don't want to harp too much on that, because again, I don't know that the probabilities of that are very high. We've got to wait for these economic numbers to be released to make a better judgment of that. But we do at this channel, we don't make predictions, but we are ready in both directions. So that's what could happen to the downside. Now, if we just continue to the upside, we're just 2 up continuation, right? And at that point, we've got an entry, which is Tuesday's high, and then we've got these targets of the the fib extensions from this holiday bull flag that we've talked about, and then we start getting into this 161.8 fib of the bull flag from the April 7th low, right? So 56, 57, pretty good area to look for if we have a really strong day tomorrow. 55.50 if we have just a reasonable push up tomorrow, maybe a slow grind or something like that. But again, remember, we do have some catalysts out there tomorrow morning, so be ready for those economic numbers. Looking at the day chart, it's just kind of like the 4 hour, right? If we go to the upside, we've got a 2 up, 2 up. We're looking at our fib extensions here, right, from the bull flag, from April low, and then we've got our gap above, right? And same type of thing to the downside. Instead of those combo 1, 2 up, 2 downs, we've got just straight up, 2 up, 2 down, combo 2 up, combo 2 downs, right? So you can see how it's nobody's game yet. Bears and bulls are still fighting it. It's not one, right? This is just the top of the range that we've been in since October, right? It's very easy for us to go look above and fail here, right? This poking above, getting, pulling some bulls in. We want to call it a bull trap, whatever you want to call it. Pulling more, bullish money into the market before dropping back and going back to, even just the middle of the range, right? Which was, if we close these two gaps and retest last month's 50%, it's really just testing the middle of the range, right? The bottom of the range really we could say is down here at this 28, 29, 30 level. All right. So, I'm waiting for a better pullback on the 4 hour and or 1 day before, getting more February contracts and starting to load up on March contracts. But yeah, I don't feel bearish at all. Right. So let's just go to the notes here at this point. I'm kind of rambled on enough, gone over the charts enough. Let's just look at the hard numbers, right? So for Wednesday, January 7th, we'll have 248 trading days left in 2026, and the close price on Tuesday, January 6th was 54.01. We know that the oops, why do I have that green? Let's get that straightened out. We are in full time frame continuity to the upside. We know the week would flip red at 50.35, and then the month, quarter, and year all flip red at 45.13. We know the market maker's expected move was $5.01 for this week. So if you take the close price of Friday and add $5.01, you get $52.25. You subtract $5.01, you get $42.23. So market maker's expected move range was $52.25 to $42.23. Obviously, we were above that range, which is fine. This isn't an end-all be-all level. It just goes based off of options interest at the end of the previous week. So it's 70% of the time we stay within that range, but there's still a 30% chance that we go above or below that range, and that's what we're seeing this week, right? So nothing strange. We know where our gaps above and gaps below are, and then we talked about from a scalping perspective or an early entry perspective in a longer day trade, we want to look for higher lows at or above opening print to get into calls, and we want to look for lower highs at or below opening print to get into puts. Now, from a 4 hour perspective, if we go to the downside, we run the risk of running that 2 up, 2 down, triggering at 53.31 with the magnitude of 51.07. Again, we are in an uptrend, so I didn't want to, I wanted to provide a reasonable bounce point. If we do bounce intraday, I would think that we would bounce around that 51.91 level. If we don't, then we reach magnitude of this 2 up, 2 down at 51.07, which then triggers those 1 combo 2 up, combo 2 downs, with magnitudes or targets of 48.63 and 48.09. Now to the upside, if we go to upside, it's again just continuation, 2 up, 2 up, triggers at 54.30, and we've got target of 55.51 and an extended target of 55.56. On the day chart, again, 2 up, 2 down on the day, triggers at 51.07, which is the magnitude of the 4 hour move. The magnitude of the 2 up, 2 down on the day is 48.63, but that does trigger combo 2 up, combo 2 downs as well with those gaps. So we wanted to provide some extended targets out here with an ultimate target of 45.08. Do I think that's going to happen tomorrow? 45.08? Probably not, but again, we need to make sure that we're ready, right? We've got a catalyst tomorrow that could really send the market in either direction. To the upside on the day chart, we're looking at a 2 up, 2 up situation, triggering again at 54.30, target of 56.92 and 58.62, right? We talked about the week. We won't go back to the charts for these. On the week, we have triggered this 3-2 up, which is technically a 2 down combo 2 up, triggering at 48.09. And we've got our targets listed out here. Already knocked out, I guess we've knocked out all 3 of them. Let's go ahead and take a look at the week chart real quick just to make sure we don't miss something here. We've already reached our extended targets, so I would say 54.42, 56.92. Let's go 54.42, 56.92, and one more target of 58.62. I think that should be sufficient for the week. All right. So we've already knocked those out. Let's just strike through. All right, there we go. So far on the week, we have triggered this 2 down combo 2 up, taken out a few of our targets already, and as you can see, we just listed some more extended targets. Don't really need to worry about the red 3 or the bearish engulfer until we get back into the 40s. But right now we're plenty far away from that. Talked about on the month, we triggered this 2-1-2 up, reached magnitude already, so we can actually cross those out. And there we go. So we've got our extended targets listed out here still to try and hit. The quarter, we're in this 1 combo 2 down, combo 2 up. Not sure why that's not bold and underlined because it is in force. We triggered it. Right, triggered at 50.76, and we've taken out 1 target so far. Right, so we've still got the extended targets out here on the quarter with the ultimate magnitude of 70.08, and then again on the year we've triggered that 2 down 2 up. We're in force, we're above 50.76, and that magnitude of that move is 70.08 as well. All right. So there you have it, the triggers and targets for everything from a scalping perspective all the way up through the 1-year chart. Hope everybody enjoyed today's video. Tried to cram in as much information as I could without taking up too much of your time. But again, I hope everybody enjoyed it. If you did, the video is free, so all we ask is a free thumbs up that you give us. It helps us better understand, the people that we're reaching, the type of help we're providing, and understanding, along with the comments, understanding how we can better help people, right? So thumbs up goes a long way. If you want to request anything, if you want me to dive deeper into something, you want me to stop diving so deep into something, leave us a comment on the video. As long as it's constructive criticism, we're open to anything right now. Please don't come at me crazy, but as long as you've got some constructive criticism, I'm definitely open to it. And watch out for that bonus content that I talked about earlier on in this video. It was a suggestion that somebody made on a video, and we're taking them up on that. So it's just another example of how we do. We listen to our subscribers and we try and help out as best we can. So after this video, I will also post a bonus video of just the prep for this particular video right here. So how we move our levels and things of that nature. Again, it wasn't very eventful today. Didn't have any broadening formations, things of that nature to move. So we'll probably try and stick to just days where there are a whole lot of movement on the chart or levels and things of that nature that we're changing. But keep an eye out for that. Just a little bit more free content for you. But anyways, again, thumbs up goes a long ways. We appreciate everyone who tunes in, and especially those who leave those comments. We love interacting with you. So we'll end the video here like we normally do. If you're watching this Tuesday night, we hope you get some good rest tonight. Wake up refreshed tomorrow, ready to trade. And if you're watching this Wednesday morning or Wednesday during the day and you are already trading, we hope you got some good rest last night and woke up refreshed. And we look forward to getting out there and trading with you.